Happy Sunday, friends. We will try one more time. Let's see. Is Instagram going to give me the notification that we are live? Hope you guys are doing well. Okay, now it seems to have clicked. I hope you guys can hear me. Let me know if you can hear me. And then, super. All right, let me know if you can hear me. And then we can just get started, because I know that it's your Sunday afternoon and everybody always has stuff to do on Sunday afternoon. So this week was a busy week. We had a lot of data. We had CPI, PPI, we had in consumer sentiment, inflation expectations come out. And of course, just generally, we had a lot going on in the markets. Last week, kind of what we expected happened. We talked about the fact that inflation expectations would probably come in high just because of the ongoing uncertainty of what is happening with tariffs. And that came in extremely high. I think that no one was expecting inflation expectations on Friday to come in at 7.3%. That just demonstrates that, the public generally, those who were surveyed in the data, are expecting an almost 200% increase in current inflation. And considering that the inflation data that we've seen the last two times have been very bearish, and even a really strong contraction, which could signal some kind of stagflation or deflation in the markets generally as we've moved towards that 2% year over year, but well below 2% when you look month over month. And the fact that people, in spite of that significant drop, are expecting this kind of increase towards above 7% is a little bit, maybe alarming is not the right word, because it is surveyed data. And as we've talked about on other Sundays, a lot of the survey data tends to be politically biased. But overall, that's just not what the FOMC members want to see. It means that embedded in people's minds, they're already expecting increased rates or increased pricing overall. And once it's kind of baked into the person's mind that everything's going to get more expensive, it does give companies a lot more pricing flexibility. And so that pricing flexibility starts to kind of move and then allows them to bake in higher prices. And I see let's see if Instagram will let us tap him in. Okay, I think it's going to make me invite him, so the other way around. Hello, Uncle Charles. How are you,
I'm
sir?
good. How are you?
I'm good, thank you.
Good, good. Been a while.
I know, but I know the seasons are busy. You have Mother's
Oh,
Day, you have you have all the family events. Now it's coming up to senior
graduation.
graduations.
Exactly. And we're in about 30 minutes on our way to a barbecue at a graduate's house. So
Yeah.
I was like, I can jump on for a little bit. But how you been?
Yeah, I'm doing well. I mean,
Okay.
the markets have been great. This bounce back has just been phenomenal and taken some pressure off a lot of people.
Yeah,
They were not feeling that 20% contraction in their long-term portfolios, but it's a great buying opportunity.
for sure. For sure. Then you got earnings week coming up, some good earnings coming up this week. So I
Mhm.
was just looking at some of those, and I know you guys always look at Home Depot and Lowe's and different places.
Mhm.
So that's kind of like, what are you looking for this week as we come up on the earnings week?
Yeah, so I mean, I think that the nice thing is that we still haven't had the depth of all the tariffs stuff kind of bake into prices. And a lot of companies have been able to kind of skirt around the the how much are tariffs going to impact us. They've been able to kind of give an if then that kind of response. So,
Hmm.
we have Snow coming out this week, and also I think PanW and Zoom. I think some of those I think that this last week with Trump being in Saudi and focusing a lot on AI and tech and just cybersecurity generally, I think some of those companies will be able to kind of highlight that, be able to pull in from that positive energy to be able to kind of give good references for going forward.
Mm.
I think that the main thing is that, for companies, as long as they um, don't, as long as they have cash on hand, like the Googles, the Apples, and so forth, they will be able to lean into stock buybacks, and that will give them a lot of support into their kind of
Yeah.
earnings forward guidance. But Home Depot and Lowe's, that will be the sensitive ones. They're going to continue to kind of reiterate probably the same of what like the Walmarts and the Targets. Well,
Hmm.
Target hasn't um, gone yet, but what Walmart and the other retailers have talked about. So I think 30% tariffs is still steep. It's still a lot for a
Yeah.
company to have to digest. So they do have to speak to that, how they're,
Hmm.
how much they pass on to customers, how much they're going to be able to kind of hold off to take
Hmm.
over more market share from their competitors. But I think that this is an opportunity for Lowe's and Home Depot to um, kind of, separate themselves from the general conversation. So we'll see,
Yeah.
they're competitors, so they could use the opportunity to be clever and to kind of talk around the issue in a way that boosts
Yeah.
shareholders' confidence.
Right. I mean, because on Tuesday you got Home Depot and Palo Alto Networks. I mean, you talked about cybersecurity. So it'll be interesting to see what Palo Alto Networks has to say. Then on Wednesday is when you have Lowe's, TJ Maxx, Snowflake, kind of that cyber thing going on. But then you have Target. So you have Target on Wednesday. And we all know what Target's been going through with all the DEI, the boycotts, and things like that. So it'd be interesting to see what Target does. And I know you talked about a little bit about Walmart, but it's just like Walmart came out and said, look, we're passing that cost on to the people. We can't absorb 30%. And then the president came back and said, you need to absorb the 30%, because you've been making all this money anyway,
Hmm.
so you can absorb the 30%. It's like you can't really tell a corporation how to run its business, and they are loyal to their shareholders. So they got shareholders to worry about. Let alone what the government has to say.
Hmm.
About it. So this week is going to be interesting. I was just kind of like going through all the companies who actually have earnings this week, and those were the ones that just really kind of stood out to me. But no, I love what you said there, and I've been following you guys in the group, when I can, seeing what you guys are doing out there, and some of you took advantage of that United Healthcare dip, so it was weird, how it fell, and all of a sudden, on Friday it decided to pop, back up, which we knew it would. We knew. I mean, look, nobody wants to see anybody get killed. I feel bad for the family of the first CEO. Then the other CEO, he decided to quit. As I don't want to be here, and for whatever reason. And then all of a sudden, they made some moves, and the company pops back up again. So be interesting to see how they continue to operate these next couple of weeks. But
Yeah.
yeah, but yeah,
I,
go ahead.
I mean, I think that, so, they have this fraud case going on if they've defrauded Medicaid. Let's see where that goes, what actually, it could end up just being like all the antitrust
Yep.
conversations with Google and Meta. And so it just ends up being noise in the atmosphere. But the fact that they've already had a 50% drop, and the reality is that United Healthcare is one of the largest healthcare providers in the United States.
Yeah.
They're
Yeah.
continuing to do mergers and acquisitions.
Hmm.
They're continuing to move forward. So there's still a lot of, positive things happening beyond the court case.
Right.
And I think it's the CEO on Friday picked up $25 million worth of
Yep.
shares. So that's going to give them will give them at least some kind of mean reversion trade.
Correct.
We're just way too far below any of the kind of data points for no one to start scaling in. And the reality is that normally when you have this big of a drop on a stock,
Yeah.
especially if it's a stock like UNH, you have institutions that they're not going to be able to sell into these lows.
Yeah.
They're going to take a
Yeah.
massive haircut. So instead, they're probably going to be doing a lot of, structural
Hmm.
selling around with options, and that can end up giving you a really aggressive gamma squeeze to the upside. So I think that, when we were looking at the structuring and looking at the open interest
Hmm.
and just looking at the charts, it looked like, similar to what happened with Google, where you had this like massive drop down and then the very next day, basically, it
Yeah.
kind of got bought back up. So,
Hmm.
at this point, you still have a lot of institutions that didn't buy into these previous lows, and they're really searching for opportunities because right now they're massively underperforming the market because they sold at the lows,
Yeah.
and now they're trying to buy after a 10%, um, even if it's a bear market rally, a
Right.
10% move up. So they have a lot that they're going to have to discuss with their
Yeah.
with the owners of that money that they're
Yeah.
managing.
Well, the crazy thing about it is I'm looking, the 52-week high was $630, and it's at, 287, right now. Even, on Friday it popped, 6%, from where it was at the low, and, it hit 291, dropped a little bit this weekend. But the volume was like 67 million shares were traded, or, on Friday alone. So if you believe in the company itself, let's face it, like you said, United Healthcare is not going anywhere. It's one of the largest healthcare institutes in the world. So if they committed some kind of fraud, okay, they're gonna have to pay a huge penalty. But we see what happens with these type of things. It's like, okay, you were found guilty, or they settle out of court, they pay the fine or whatever, and then it's back to business as usual.
Hmm.
Get a new, like you said, get a new CEO, CFO, kind of clean it up. Then next thing you know, 6 months later, the company's right back where it was. So kind of like when CrowdStrike had that whole outage thing. I'm
Yep.
laughing. CrowdStrike, everybody's like, oh my God, what's going on, and it fell off, and I'm like, just look at where it is today. It's right back, pretty much where it was. So,
Yep.
but yeah,
Yeah, and those sectors, I mean, the reality is, especially when it has to do with facilities and
hmm
service provision,
hmm
it's not easy to just suddenly
no,
like, I mean, it's not like Cigna or something like
no,
that can just like pop over and be like, okay, we're gonna, because I mean, really, healthcare is a massive real estate deal,
yeah,
right? And I
yeah,
mean, to have to like to build hospitals or buy hospitals, update them, all the technology. I
mhm.
mean, it's a lot. And so I think that it's just one of those kind of bulwarks where it just can't disappear itself.
Right,
It's going to
right,
be,
yeah, hmm
it may not go back to the highs
yeah,
right away,
yeah,
but it it will eventually get bought up, and they'll figure out a way to get around this fraud situation, whether it's doing some kind of payout to Medicare or
yeah.
and Medicaid, or paying some kind of forward taxes or penalties. They'll figure
Mhm.
something out.
And the interesting part about what you just said, if they do some kind of payout to Medicare or Medicaid, knowing that the federal government is trying to cut back on, Medicare and Medicaid, getting a nice little sizable check from United Healthcare and maybe some type of Medicare, Medicaid deal, United Healthcare comes to the rescue or whatever, it looks good, some goodwill. It's amazing how, these type of things always seem to work themselves out,
It's going to be like
especially
Doge 2.0.
I, it's like Doge was just out here, doing crazy things. Everybody was like, "Oh my God, Tesla's falling apart," And all of a sudden, we didn't see Elon anymore. Elon just kind of like said, "Well, maybe I better go back to what really made me my money."
Hmm.
And what, the stock's back up to $349 now. So it's just like, it happens.
I
You
mean,
know,
I think the reality is that Elon went too far
yeah,
with his public appearances. Had he
yes,
been doing everything he was doing with Doge silently,
it probably wouldn't have garnered them so much negative attention.
Right.
But it was the combined arrogance of everything he did with Twitter and now X, and then everything he did with Doge, and just like it was just a lot all at the same
Yeah.
time, and it was a kind of a publicity stunt nightmare that I think the right
Yeah.
people kind of, got him in a chokehold. And I think that leak that they were looking for a new CEO was really enough for him to realize that, okay, we can joke about this, that, oh no, this isn't really serious, but it could have just as easily been, no, we are dead
Yeah.
serious about this. And he knew that. He knew that they
Yeah.
were testing the waters to see how the stock would react. And the fact that Tesla stock reacted positively to the idea of
Mhm.
him stepping down
Yep.
was was probably the big awakening that he had really kind of screwed up his reputation at the moment.
Oh
So
yeah, big
um,
time. Well, you come to the conclusion that you're not bigger than the company. Somebody else can come in, okay, and pretty much take your blueprint and run with it. Um, I remember back when Tim Cook took over. Everybody's like, oh my God, Apple's gonna fall apart. You know, the
mhm,
other gentleman, unfortunately he got sick and passed, but he was the brains, behind it. But Apple seems to be doing just fine. Every time they want to write Apple off, Apple's like, oh, we're right back to where we were.
mhm,
They're the largest company in the world, $1 trillion worth. And it as much turmoil as they go through, with now the presidency, like, okay, we don't want you making phones in India, we don't
mhm.
want you making phones here or whatever. It's like, we want you to bring them back to the U.S. Nobody's buying a $3,500 iPhone. I mean, I know. Well, I be like, I'm not buying a $3,500 iPhone. That's ridiculous. Okay, I will switch over to Samsung so quick. It's like, what happened to your iOS? I left it behind because you know $3,500 for a phone. No, no,
Mhm.
it's
And
not that
it's not
serious.
only that, it's all the services. Once people
Yeah,
stop using those services, I mean, it's like, okay, Apple, you want to create a new search
right.
function. You've been telling us that you're going to be this forever, and now you want to compete, like get this AI to compete with Chat GPT. But if nobody's using your phones, what I'm gonna get like what on my computer and start using the
Exactly.
Apple Chat GPT. I
No,
already have my Chat
no,
GPT whatever um,
yeah, yeah,
subscription. So,
yeah. So
but actually, that that actually brings up it's talking about Apple. I actually was brought up a good point of something that over the weekend when I was kind of doing my research, I was looking at the amount of buybacks that are happening presently, and it is amazing, first of all, how much cash all of these mega cap
oh,
companies are sitting on, because the record amount of buybacks, I think it's like 62 billion of buybacks,
yes,
some
yeah,
crazy
yeah.
number like that.
Mm-hmm.
And it's really only just like a handful of companies that have
Right,
that much cash to do it. It does signal, though, that if the Googles and the Apples and the mega caps feel like they need to aggressively be doing share buybacks, um, they must they must not feel confident that they're going to get the institutional buying
right,
going forward, at least in the short term, and probably because of the fact that we don't really know what's happening with all of this tariffs business and reshoring, and where, nobody wants to feel like we don't know where you're going to be building the phone. We don't know what the regulatory environment is going to be like. If you try to go to India and Trump doesn't like it, are you suddenly going to have all these legal issues that you're going to have to face in order to
mm-hmm.
get your iPhones repatriated back into the States for US buyers? The general public doesn't like that kind of uncertainty, but the fact that they can do, such a huge buyback scheme just shows that, they know how to weather the storm, at least
Yes,
until they get to the other side, which is positive for shareholders.
yeah. you're right about that. The one thing about it is you think about, normal everyday people just want to like, look, I'm going to the Apple store, I'm picking up my iPhone, it's $900, it's 1,300, whatever. But you start talking about
God,
$3,500 to
no.
4,000 for a freaking phone. It won't be anybody in those Apple stores anymore like they are today. It's like, we'll see you in about 2028 or whatever, when the new president comes along and somebody comes back to their senses and they can go back to building phones where it makes sense,
I
now.
think that they'll end up with a massive business in refurbishing because I
Yes,
think that
yes,
everybody that has like those old iPhones sitting in
yeah,
their drawers, suddenly those
true,
things are going to be worth like
yeah,
the original price again.
yeah,
People will start, I mean, I have like three, four
exactly.
older iPhones just like
Yes,
hanging around. I mean, I don't ever feel the need to get rid of them because
nope,
they're fine. They just don't do what I need
yeah,
them to do
right,
anymore.
right,
And
right,
I'm like,
right.
but if somebody wants to pay me $500 for my iPhone,
Hey,
I ain't gonna be mad at it.
that's a nice little piece of change for vacation, right? I'm speaking of that. So I was watching, I love it when you're out with the kids and I see what you're doing with them, It's like, well, there goes Suzanne the mom right there. I started laughing, but so it's coming up on summertime. What do
Mhm.
you have planned? Are you traveling for the summer? Are you guys being still for the summer? Kind of like what are you doing?
So actually, we are moving to the Balkans.
You're moving?
We are moving from Germany. We are moving to the Balkans. So
Okay.
we decided, Italy is beautiful,
Yeah.
but it's not beautiful enough. So we're moving just to the other side of
Okay.
the Adriatic. So we're moving to Montenegro, which is just south of Croatia. So
Yeah.
we're
Okay.
essentially moving to Croatia.
Oh
And yeah, we're
wow.
we're moving to Montenegro this summer. So in the
Okay.
Easter break, we went down, we got the kids all registered at school,
Okay.
organized our housing and everything. But yeah,
Okay.
so it actually means that this will be the first summer that I think in probably like 20 years that we actually don't travel anywhere because to get my residency papers, I have to stay
Yes.
in Montenegro for the coming months. So we
Okay.
will move.
Okay.
The kids will have to start learning Montenegrin, which is
Wow.
essentially Serbian. And yeah, because they're going to be Djokovic. That's what I keep telling them. Don't worry,
Just
you're going to be tennis stars. It'll
a,
be worth it in the end. Not
another
really. They
language
don't
that
play.
that another language that add to their repertoire.
Yeah.
By the time your kids get out of high school and get ready to go to college, man, it's like, oh, I speak about 13 different languages because my mom had me all over the place.
But the thing is, I'm like, sometimes I'm like, is it actually going to be, is it actually, okay, besides the neurological
Yeah,
development that you have from learning other
yeah,
languages, um,
yeah.
are you actually going to work somewhere at the UN? Won't everybody just have like these AI
Yes,
earpieces where everything is like
of
simultaneously
course.
translated?
Yes, of course.
So maybe they won't be
Okay.
able to make money off of
Hey,
it, but at least,
hey,
their brains will be
okay.
tested.
Okay. Well, congratulations on the move. We'll definitely be waiting to see what adventures you have over there.
You'll be seeing a lot of kayaking, I think,
Okay. Okay. Cool.
because we live right, because we'll be living right on the water.
Oh,
So yeah,
nice,
yeah.
nice. Okay.
So that's
Good.
that was the big push is, things are changing in Germany. It's getting really expensive to live here. I couldn't justify the
Hmm.
cost of staying here because I don't work
Right.
in Germany. So it was kind of strange to
Yeah.
be here. And then when we started looking around, we looked at all the other like hot expat hotspots,
Yeah.
but they've just gotten so popular that it's actually just not, it's not the same feeling. Like
Yeah.
if you go to Portugal, you don't feel like you're in Portugal anymore. You feel
Yeah.
like you're in, I don't know, like,
Yeah.
you're just living with a bunch of expats, but you don't have the cultural feeling. But because Montenegro isn't part of the European Union yet, and
Mm.
it's so small that it still has like this kind of very provincial feel
Homey,
to it.
homey
So
feel. It still feels
yeah,
homey. But see, what's going to happen, Suzanne? You're going to get there. You're going to be posting pictures, and everybody's going to be like, you know what? We're going to be Suzanne's neighbor.
Why not? Everybody's welcome. And already people in the Discord are like, can we start like joint purchasing holiday homes? We can do like our own, what do you call those schemes where like everybody gets 1 month
There you
holiday
go.
to the house?
Hey, get an Airbnb. Everybody gets a month. Pick your month. Sounds good. But congratulations, congratulations.
Thank you,
I know
thank
the
you.
kids are probably excited. New adventure for
They
them.
they are and they're
Yeah,
not.
they're
Xavier
gonna miss
is
their
sad
friend.
about leaving his girlfriend.
Ooh,
5
ooh.
years old and already have girlfriends. And then
How could
um
you, Mom? How could you take me from my
no,
girlfriend?
and so but he's already decided. I don't know where he got it in his mind. He's been telling everybody that um that his girlfriend and her family are also moving to Montenegro. So that has been his the thing that he's been telling himself to, you
Wow.
know, ease the pain of leaving her behind.
Hey, speaking
But
into existence, might be your next door neighbor. You just never know.
why not? Exactly. So
Okay.
no, the kids are excited, and yeah, it's
Yeah.
such a beautiful country. And yes, everybody's welcome to
Look,
visit because hopefully one day we'll have an actual trade speakeasy there where people can actually come and do live trading together, like those. What do you call those? Community
yeah. Yep.
work
I know what
spots.
you're talking about. Yep. Yeah. Look, everybody in the chat saying I'm coming to visit. The
Well,
time's
yeah.
here.
And see, look, we have Dre in the chat. We also have Zay in the chat.
Yeah.
So we already have a lot of the educators. So you guys are welcome. We can come.
Yeah.
We can do a wealth summit,
Yep.
like the second come up series, wealth summit, Montenegro style. It'll be like the most
That
black people in
that's an
one
idea
spot
there.
the country has ever seen. But we're going to do it.
Oh yeah.
Why not?
I Wealth Summit in Montenegro actually sounds pretty nice right about now. Anyway, well, look,
Everybody has to get beach body ready.
hey, but that's a whole other thing there.
Which,
Give us a year.
which, speaking of that, you're the call. I mean, look at Hims is
Yep,
just exploding on. See, look, Andre's in here as well, and he's
yep.
one of Zay's guys. So see, it looks like we have the quadfecta. Is that even a word?
Hey, when when him said that they were going to be selling, Wegovy and all this other GLP stuff, I'm like, okay, now it's like it's licensed. It's going to be selling like Skittles. People thought I was being funny when I said that, but I'm just like, hey, everybody's going to be able to afford it. It's not going to be, expensive. And you already know the quality of the product. Now it's like they can move the quantity, of the product. It's going to be crazy,
Hmm.
and I'm just like, Hims is already out here, everybody knows who they are. And so it was kind of an easy call, I'm
Hmm.
not going to even say, I was the smartest guy on the block. I was just like, when I saw it all over CNBC and everybody was talking about him selling, GLPs or whatever, and they're not going to be, $1,000, I was just like, oh, this is kind of a no-brainer,
Hmm.
so it definitely helped. Now, it helped them, but then on the other hand, it hurt like some of the other manufacturers, who had the monopoly on it. But that's what happens when a drug becomes, generic, if you want to call it that. It's kind of like, look, everybody's had some type of antibiotic before. Antibiotics used to be very expensive. Now, you go pick up an antibiotic here in the state, oh, it's $10, if you got,
Hmm.
relatively good insurance. So it's like these GLPs now are going to become, like the next set of antibiotics that you can get. Everybody can get them if they want them,
Hmm.
So it's just kind of different. But anyway, I got to run. I wanted to jump
Yep.
on. It's been a while. We're going to do this little barbecue thing for one of the graduates here. So I wanted to say hello. It's been a minute. Hello to the family, and we'll see what transpires this coming week. Like I said, Palo Alto Networks, Target, Lowe's, HD. It's going to be an
Hmm.
interesting week because you even got TJ Maxx. I'm looking
Yep.
at these retail companies. How they're going to approach this whole. It's not 145%. It's 30%. You know, and we also saw huge moves in car buying, of course, here in the
Hmm.
States, where people thought like, oh my God, who wants to pay 145% on top of an already expensive car? So a lot
Hmm.
of these companies were selling cars, but now that it's kind of calmed down a little bit for 90 days, we'll see what happens. But and then I'm sure you'll talk about the president making all the $1 trillion deals that he made, while over in and look, the ones we know about and the ones we don't know about. I'll leave it at that.
Yep, exactly,
Yeah.
exactly.
Anyway, you guys have a good one. I'll talk to you later. All
All
righty.
right, bye for
Bye
now,
bye.
Uncle Charles. Yeah, so as Uncle Charles was saying, I mean, we have a lot going on this week. It's not so much just like baked in news data. So if you go to Forex Factory, you're not going to see a lot happening except for really on the Thursday and the Friday. Friday, we have retail sales, which goes hand in hand with whatever we're going to hear from HD, Lowe's, TJ Maxx, Target. But of course, a lot of it's going to be carried on from, what we've already heard. And now that we know, at least for the next 90 days, we have this 30% tariffs instead of some of this other more extreme numbers. But the reality is 30% is still a lot. It's still a lot more than the 10% base case that a lot of people were kind of hoping for. So the markets are still trying to digest that. Now, a number of you had already DM'd me about what's happening in China, um, what's happening with the downgrades. And so this weekend, obviously right after market close, we had the news come out that the third company had already. So now Moody's, S&P, and there are three of them. I just can't think of the third one's name, but the three kind of ratings companies have come out now and had downgraded the United States. The last two times we had downgradings from the first two from S&P and gosh, why can I not remember what the third entity's name is? Just escapes me, but it's okay. Fitch, thank you. Zay. Okay, Zay, if you want to come up, feel free because Uncle Charles had to go to a party. So if you are available, you can always tap in. And Dre, same to you. Um, yeah, so, this is the third time. The last two times that we had the downgrades, we did see about a 10% correction. But the fact that this is the third entity and they're kind of just matching what the others have already said, we may not necessarily have such a massive correction since we are still about 10% down from the new for 2025. The reality is that just gamma, the way we have the gamma positioning, last week I did signal that we had this squeeze up to the 5,900 and maybe to the 5,950, but that after that we had a massive put call parity. So going into this May expiration, we had just this massive squeeze that was kind of taking place. But so this OPEX, we had just a huge amount of calls and really not that many puts. And part of that was twofold because the reality is that the VIX was just so high, it was too expensive to get puts. And since there were so many calls just positioned right inside that squeeze potential, because we were in that potential implied move with the VIX being so high, it kind of opened our range of potential movement on the S&P. So the squeeze up to the 5,900 wasn't shocking or surprising. I think that a lot of people saw that. And usually in May, you do, even though everybody says sell in May and go away, usually May does end about 3% up. So May does tend to be a positive month, even though people then start to readjust their stuff going into the lower volume summer. So we did also talk about that we thought that there would be a lot of weakness presenting in the summer because of low volumes and because of debt ceiling and budget conversations that will be coming up just before Congress is supposed to go into their summer holiday. So we already kind of talked about that structuring, but the reality is that, kind of we saw it that we had this kind of strange squeeze into the, that 330 algo tapped in and we just got that massive pull up. Normally with OPEX, a lot of companies are settling their calls before market close just so that they can balance out books. But actually, on this Friday, no one closed their contracts. So all those contracts that were building up between the 5,900 and 5,950 kind of stayed there and pinned us. And of course, then immediately after market close, you saw that, roll over. Now, if you were just looking at the chart and the Moody's news hadn't come out, I think you still would have gotten that pullback because the whole day the market was really trying to roll over and give us a bit of a pullback because we just were too directionally straight up for the duration of the Friday. So that kind of rollover post market, I think was really already kind of baked into the price action. Now, what we always say is that news accelerates the the price action that's already being positioned. So if you have your levels up, you have those higher time frame zones, you can already see that, okay, we're a bit overextended. We could get an intraday kind of pullback. But of course, the Moody's news coming out immediately after the open obviously setting um, a lot of kind of quick selling in the futures market. The other thing is that a lot of the puts so because volatility got so low into the Friday, I mean, I think it got around 16 and a half by the end of the day. So, all through the week, we moved from like 19 to 18 and a half, 18, 17 and a half, 17. It was straight down on the VIX. Puts were just getting cheaper and cheaper and cheaper and cheaper. And so you can see that, there was a lot of like long put hedging that started to come into the market. But a lot of that was just too far out the money for it to kind of get ignited. But if we open tonight and we carry on this downward push, we are going to expand that gamma exposure on those long puts that have been purchased over the last week. So do we see a 10% correction? That feels like a lot, um, considering that, people feel like there's still positive energy with what the conversations going on with Saudi and the potential investment from the GCC countries. Um, so there's like push and pull in the conversation if you're just looking at like the stock market pricing and forward PEs and what the earnings are going to look like. I mean, earnings still haven't been impacted yet by the tariffs because they haven't actually started to impact us, right? And we keep pushing it off this 90 days, 90 days, 90 days. So in that sense, do we get the same kind of shock value that we did the first two times? I don't know that I'm ready to say that. But I do think we're going to get some kind of correction here. Also, on a lot of charts, we have just left a lot of gaps on this way up because, when you get mean reversion trades, the speed of the move to the upside, especially with bear market rallies, just leaves a lot of just price nakedness. And the thing is that if it was just on equities, I could say, you know what, maybe, you look at the whole sector and some of the top holdings don't have as much price gapping and others have price gapping. So maybe we don't have to go back and fill it. But the problem we have is that we have a very big price gap on futures. And I don't think historically ever that a NASDAQ or an S&P, ES futures, that they have left a price gap in the market. Um, that, that usually gets filled. So whenever you have those Globex gaps, the gaps that happen in the futures markets, those need to get filled because that's like a significant price imbalance. The fact that we kind of created that and then have left it the entire week, that's kind of like a missile in the water. So I would be cautious about that. And that is distinctively different to price gaps on equities because of the fact that you have the pre-market and post-market and all that kind of activity. It often can leave price gaps that don't have to get filled like quickly. But I think that leaving price gaps on futures doesn't make any sense. So I think that that is kind of a caution sign for those who are long everything. You might want to start figuring out some hedges. The other thing is that, one of the things we talked a lot about, going into the, after we had the significant drop down, the almost 20 and almost 20% on futures, was, would we continue to press down? And one of the things I kept saying is that, if you zoom out on all of the equities charts, most equities came back to the last base that put in our most recent highs. Now, a lot of stocks never went back to their all-time highs. Some did, but some didn't. Some, created kind of a lower high. But that origin move that put in those highs, we came all the way back to it. So at that point, I felt like we were really in a solid basing area for us to potentially get like a quick V-shaped recovery. And we talked about that here. But for some equities, we are back at the most recent highs. So those highs that were kind of grinded out in the kind of February, March period, depending on what companies you are looking at. So I would be cautious here about getting like extra long. If you are seeing that you're sitting inside kind of the origin of the down move, that area can have a lot of selling activity, especially for those that may have bought at the highs and then have been kind of waiting for this moment to like fix their accounts or reposition themselves. You could end up getting a significant, if not consolidation, just a natural kind of pullback. So you clean up some of the gapping in the prices. If I'm just looking at the charts. So, that's kind of how I see what could happen for the S&P, which then of course could impact what the price reactions are going into earnings, and just the overall market, how bad is the Moody's thing going to impact everything. I think that just naturally we should expect pullbacks right now, but I don't think that we get a 10% correction like we did the first two times. Then just generally speaking with the macro environment, I mean, I think the reality is that there's still a lot that's unknown about what tariffs are going to look like. So, some institutions are going to be nervous to lean in since we've already had like a 10% a positive correction here. And but a lot of institutions were significantly naked. They did not they didn't buy any of the dips. So, their money assets they have under management could be down still 15% and didn't participate in this upside. So if that's the case, then you could still see institutions trying to lean in to stronger areas, stronger sectors of the market, just because of the fact that they just have almost no such limited exposure right now. Because most of the buying was from pensions and 401ks that have those bi-weekly purchasing, like legal purchasing that they need to do. And retail was massively buying on that big dip. But institutions weren't participating as much. And, institutions didn't participate in October 2023 either. They were very late to the participation, and that significantly impacted their returns. And a lot of hedge fund managers lost their jobs and money managers. So we'll see if that like kind of creates this disjointing that just gives us a really nice, like a nice consolidation, because you don't always have to correct with a pullback. You can correct with a consolidation. You just let time catch up to your price positioning. So we'll see. Something that I think is really important is just on kind of the macro issue overall is the US dollar. The US dollar is obviously weakening. That has been on purpose, not on purpose. It obviously helps the conversation of reshoring, negotiating manufacturing, helping us get our trade deficits more manageable if we kind of reduce the blunt force of an exceedingly high dollar. So for the manufacturing conversation, obviously, then having a weaker dollar is more sustainable, is more helpful. However, this is currencies don't like volatility. When you start shifting currencies very, very, very rapidly, it significantly impacts other aspects of your trade deals. So something that a lot of people kind of expected in this whole tariffs conversation is that Japan would be one of the first countries to kind of show up to the conversation. And the reality is that years back, when the United States was negotiating with Japan on their different kind of the stability of the yen. They in the 80s and 90s they did move their currency in such a way, they strengthened the yen, and it basically killed their exports business. And they've suffered from it ever since. And the fact that the U.S. is pressuring Japan to re-strengthen the yen against the U.S. dollar will essentially allow the U.S. dollar to weaken against it. This is very problematic once again for Japan. I think a lot of people thought because of the close relationship between Japan and the United States that the Japanese would kind of work work closely with us to hurry up and get the tariffs deals kind of done and dusted because we're close economic allies. And that hasn't transpired. And in a lot of ways, Japan has kind of leaned closer to China in a very kind of like kind way. They've done it very diplomatically without, um, not because they're not trying to frustrate the United States, but they obviously don't want to destroy their economy. But I think that this was probably a little bit surprising to just generally the to our politicians because at the end of the day, I think that Japan and the UK and Canada and Mexico were probably the four countries that should have quite easily like come in and kind of negotiated their trade deals and then that be done and dusted. And that really wasn't what transpired specifically with Japan. It's not that they're hostile, but they are needing to be protectionist of their own country. Um, and also for China, the reality is that yes, China doesn't want to go into like a trade war with the United States. They don't want to be embargoed essentially. But at the same time, the biggest issue now is that China is not really interested in buying US debt. And the thing is that this isn't new. Like a lot of people are like, China's dumping all of our debt. It's a twofold issue. So part of it is China hasn't been buying our debt, neither has Japan at the rates that they had been like 6, 7 years ago, 8 years ago. They have consistently been decreasing the amount of US Treasury debt that they have been buying. And in part, that's because um, they have been able to do other economic deals that don't force them to have US dollars. They don't have to do all of their trade in USD. And so because of that, they don't need as much US dollar liquidity as they had been. And so, that's something that I think was kind of like baking in the background, but then on the recent need for foreign actors to buy US debt, everybody was just expecting that like people would like come back and buy. And that's just not happening. And it's not going to happen that quickly if people don't need US dollars as much as they used to. Because that was the main function of holding treasuries is that when you needed access to US dollar liquidity, you had the treasury bonds to be able to sell, just like having US equities to sell. Um, but if the dollar is going to be weakening, then, why does anybody want to be holding those bonds anyways? And if they don't need the liquidity tomorrow, they might as well just take the liquidity today and then do something more profitable with that, with those holdings. The other thing is that China is trying to grow their own bond market. They don't want the yuan or the renminbi to be as strong as the US dollar. They don't want to have a bond market like the US dollar. China does not want to be the reserve currency. They're absolutely not interested in that. It comes with a lot of logistics, specifically providing liquidity to the entire globe, which they don't really want to have to develop those systems. It doesn't do anything for them. But they do want to be a strong mid-range currency. They want people to know that their currency, though it is not pegged, that it is a stable currency, that other countries, if they trade utilizing the yuan, if they keep the currency, that it is not going to have some significant devaluation where in a matter of 3 or 4 months it loses 8, 9% of its value. That's a massive haircut if you are holding US dollars. Um, the UK just became the second largest treasury holder. Exactly. So I don't think the UK was necessarily extremely excited about that, but the UK does not have the wherewithal to exist without its cooperation with the United States. It's Brexit put them on a very lonely path. And I think that a lot of the strength of what the conversation of Brexit was trying to have leaned on the fact that they had other trade partners. And when the United States became a little bit aggressive, um, that kind of forced their hand. It was quite clear that uh, the UK was not necessarily very happy about, about their side of the negotiations, but they did want to get that out of the way for their own stability. Hence the BRICS potential. So the thing with BRICS is that all of the countries are really strong commodities holders, and they don't, so in performance, in bond performance. So if you wanted to have like the best performing bonds, you would actually have wanted to have the Brazilian bonds. Those things are like massively outperforming. I think you can get like almost 20% return a year. Those things are just amazing if you're looking for money. But again, they have more currency fluctuations, they have higher inflation. So there's a lot more going on in their economy, and they allow their economy to breathe, right? And so because of that, it's do you want to have your reserve currency in you know or the global reserve currency in like Brazilian real? I don't think so. I don't think that that's going to work. Um, and to create an entirely new currency is really difficult. It requires a lot on just the security functioning, what that looks like, providing enough liquidity. How do you move around that amount of cash? Um, it's not easy, and the thing is that it takes a massive amount of structuring, and I don't think any country really cares enough about becoming the reserve currency to put that kind of capital behind building the structures required and the security required and creating like the printing capacity for an entirely new um, currency, and then have, all the impacts of, what is it going to be pegged to? What does it, you know, I, I think that there's just generally, none of the BRICS countries want to be the reserve currency. It is a headache. It's a massive amount of work to be the reserve currency holder, and the BRICS countries are an alliance. I mean, even the European Union um, had a lot of difficulty moving, um, each of the countries into the Eurozone. They did it over many, many, many years. And I don't think there's any, I don't think South Africa is like interested in participating in something like that. What they want to do is to be able to trade directly with each other in their own currencies or utilizing their own commodities to be able to make trade without having to utilize the US system if, you know, um, but to become the reserve currency, nobody's really interested in that. I don't think so. So I think that in the mind of the BRICS countries, there's something that they want to achieve. And because we haven't had like just direct commodities alliances where people can trade oil for gold or gold for silver or silver for something else, because everything was used the dollar system as the go-between to kind of measure all of those things. People weren't like, oh, I'll trade you 3 apples for 5 oranges anymore. That just was too choppy and created a lot of volatility when if somebody could corner a particular market. So I don't think that people want to get away from like just get rid of the US dollar and only be trading commodity to commodity. That is can be extremely expensive for everybody, and it can cause people to corner markets. We've seen it before where you have countries that suddenly end up with like stockpiles of sugar and no one else can get sugar, and suddenly the price of sugar quadruples or the cost of cocoa quadruples. I mean, we all saw last year the crazy volatility on cocoa. If you start trading commodity to commodity, your commodities are going to have such volatility, you would never be able to measure inflation because literally like week to week your inflation could be 10% and then 1% and then 20% and then -3%. Nobody wants that. So I don't think the BRICS countries are interested in going that far. They just want to empower themselves away from like the US printing press. But to actually take over the US kind of reserve currency, no, I don't think anybody's really interested in that. So I think that, China has never, into this kind of season of the Chinese existence, there wasn't really a time that China was trying to be a like a mid-cap company, and like a mid-tier currency. But now they do. They want people to be able to purchase their bonds and to be able to participate in their bond market, but not at the level of being the United States. They don't want that headache. So yeah, so I think that China has they have a lot positive going for them right now, and they've really like taken this opportunity to kind of put into action a lot of economic policies, which probably had we not had the tariffs not been so aggressive, they might not have had to do it at this fast of a pace. But I think they've had to exert themselves in some areas of forex and currency and, develop, increasing the kind of attractiveness of their bonds. I think they've had to push that forward a lot faster than they necessarily would have, but they've been able to do it because they were prepared for this. I think they kind of saw where things were going with just the rhetoric inside the United States, that they knew that we were going to get here, just maybe not at, like 4 months after Trump is in his second presidency. So, um, so how that impacts, like the whole tariff conversation going forward. The reality is that tariff conversations were a lot more difficult than probably Bessent and Ludnick and Trump thought. Their cabinet were not expecting this much pushback. They were not expecting that they would have to, keep kind of escalating to the point that their tariffs suddenly became the Iranian oil embargo all over again, and potentially crushing the U.S. economy. The other thing is that somehow they thought that this was going to cause our bond yields to drop. So a big part of their motivation in being so aggressive so fast was that their idea was if we have a weakening dollar, it will make our bonds more attractive. People will buy our bonds faster. And because our inflation rate is coming down, the Fed can drop the Fed funds rate, and that can push our bond yields down. And that's totally not what happened at all. Instead, it created so much uncertainty that then the Fed said, actually, we have no idea where inflation is going to be 6 months from now. So how can we just start cutting rates when unemployment is still really stable and the labor market is still very stable? And, you know, inflation seems to be coming down towards our 2% target, but we have no idea what's going to happen 3, 4, 5 months from now. So we have no need to cut rates. And the dollar was weakening, but it was causing volatility in everybody else's currencies and made it unattractive for people to be buying yields at 4.5%. When if inflation goes to 7%, why do you want bonds at 5%? You are literally bleeding money from every side of the conversation. And that created a lot of competitiveness in the bond auctions. And we've seen that in all of the auctions. A month, like 6 weeks ago or 4 weeks ago, no one was showing up to the bond auctions, and that was pushing yields up. Now we have people coming into the bond auction, but the reality is that we have not yet structured the amount of debt that is going to be coming due for refinancing. That won't happen until the summer. And because everybody knows that the US is going to have to roll out a massive amount of debt, everybody's waiting to see where the bond yields go. And I think Trump and Dissent and Ludnick kind of woke up and realized not only are we crushing the equities market, we're crushing businesses, and now we've like lit a fire under bond yields. So a lot is broken under the surface right now. And how much will that impact? How much does that impact equities? Normally if bond yields are going up, people would move from equities to bonds. But actually, I think right now people are more interested in holding US equities than they are holding US bonds because of the fact that they think that bond yields could increase by another 10, 20%. So they certainly don't want to be buying now. The other thing is that they don't know how Bessent is going to structure the bills. So we don't know yet how much is going to be structured into like T-bills, into longer duration bonds. But one of the things he did say is that he just really despised that Yellen was rolling out this higher rated debt, but in such short-term T-bills. Of course, she was trying to buy time as yields were coming down. Because remember, when Biden was president, bond yields were dropping significantly. We were down below 3.8. Now we're above 4.5. Like we've moved up like 22% in our bond yields since Trump has become president. So, in Yellen's mind, and when she was looking out, her idea was, okay, if Biden were to, get the next presidency, he will continue to massage markets in such a way that those bond yields continue to come down evenly and smoothly, and inflation can continue to come down evenly and smoothly. And so had the bond yields come down to 3% and had Powell felt confident to continue to slowly drop the Fed funds rate, then we could have started having the conversation about increasing the number of 10, 20, 30-year bonds, where we're kind of baking in an interest rate of 3%, but we cannot bake in a interest repayment for 10 years at 5%. We won't be able to afford the interest. The other thing, and we own the printing press. So there's a lot that we can do to kind of Ponzi scheme the system. But it does then basically drop anyone's sense of confidence in the US system, hence the downgrading of our bonds. But but the reality is that we have a lot happening. We have this summer. They want to expand the budget. They want to cut taxes. And here's the thing. When you cut taxes, even if you say that those taxes are only going to be cut for the next 3 years and then we'll renegotiate, it is never popular for any elected official to be part of tax cuts and then come back and have to sell tax increases as they expect to be reelected. Now, if everyone in Congress decides that they don't care about getting reelected because, hey, they're probably going to die in the next year anyways, because of just the average age of our Congress, which is just massively crazy. The reality is, if anybody has a dream to be reelected, they can't be looking like they're, voting for tax hikes, especially when the president is saying he wants to cut taxes. But overall, the math just isn't mathing. It doesn't make sense. You can't cut taxes because at the end of the day, I mean, they're going to try to cut taxes and, give the previous tax cuts another 3-year kind of bandwidth. But the reality is that if you cut taxes, the money has to come from somewhere else. And if you can't roll out that much debt into your bond yields, I just genuinely I don't know how this is going to look, right? Like the pieces don't fit together. We have round pegs and square holes and triangle holes and I don't know, hexagonal squares. This has just became like too many moving pieces. Doge couldn't do what they were saying that it was going to do, that they were going to find all this fraud and they were going to reduce expenses. I mean, they're going to reduce expenses by cutting Medicare and Medicaid in the end, and that's highly unpopular. Republicans will not support that. So that's not going to end up getting passed for sure. Or again, Republicans just hold like a minor majority. So they can't afford to be losing a bunch of seats in this next election cycle. It's just too many things. Like this is kind of like a like a layer of unclear signs of like what's going to happen next because Trump was elected to reshore. He was elected to bring back the middle class. He was elected to do all of those things. He wasn't elected to increase manufacturing by cutting Medicare and Medicaid. That's not what his supporter base was voting for. He wasn't elected to create an embargo with China. He was elected to get, trade deficits kind of rebalanced. And he's trying, for like whether you agree with his path to this process, he is trying to still honor his commitments to his base. Otherwise, he won't get reelected if he truly tries to run for a third term, or whoever he puts up for in the next cycle won't get elected. So, there's just a lot going on. And I think that it's easy to look at the stock market, to look at a bear market rally, to look at, these massive squeezes that we've had. We had a sharp 20% downturn, and then, we've kind of given half of that back, and we're back at a healthier point overall in the stock market. But I think that just overall, you have to be cognizant of the fact that the equities market doesn't exist in a bubble. Maybe singular companies can exist in their own world, especially companies like the mega cap companies, which are literally the size of a country in the amount of economics and cash that they hold. But overall, you still have to respect the fact that there's a lot of negative economics that isn't even like bubbling under the surface. It is on the surface. We are moving into the summer months, and we're moving towards the, summer recess, and we're moving into these really strong negotiations about what's going to happen with the budget and what is going to happen with the deficit and how we are going to finance increased spending and how we are going to roll out the debt that is coming up for refinancing. These are massive question marks, which we don't have any clear answers for. And, if we want to go to sleep and pretend that those things don't exist, I don't think that's a good idea. Um, do I think we can, continue to squeeze a bit more here? Certainly. Usually markets, like when you get squeezes, the squeeze usually lasts longer than people expect. But as you saw on the 20% down move, when it rolls over and it loses its steam, it can come down on you very quickly. Right now, the VIX is extremely low, historically speaking. It means that hedging is very cheap. So, if you didn't like how it felt when there was this 20% downturn in the market, if you didn't like how that felt in your spirit, looking at your 401k, this could be a good time to, zoom out, look at the charts, see where we are in comparison to the whole, and then determine if your positioning makes sense. There are very cheap ways to build in hedges to your portfolio that doesn't drag too much in the event that we get another 2 or 3% up. Maybe we get up to that 6,000. But I mean, now that we've had this Moody's news and we've already had OPEX, I don't think that we just continue to squeeze directly from here. I do think we get some kind of pullback going into the next week or two. But I think like overall, this is a good time to start considering how you want to position your accounts, especially if you have substantial holdings in your retirement and in your savings. This is a good time to kind of, get some hedges put on. And you don't have to do it just by long puts. You might want to maybe get some calls on some inverse ETFs. You might buy some shares on some inverse ETFs. You might want to get short puts on an inverse ETF with the expectation that, if the market comes down, those, double leveraged stocks could then perform really well, something like SQQQ or something like that. Or you could buy long puts because, hey, volatility is really cheap right now. You wouldn't be overpaying for it. The other thing is you could do something like a ratio spread. A really, really, really cheap way to protect your account is to buy a put and then further out the money, sell 2 puts, and you can create almost a delta neutral trade. So if you were to buy a put at the 20 and sell 2 at the 10 delta, you essentially have a 0 delta trade. So you probably will be able to get into that kind of position for a small credit. If the price comes down even a little bit, your long put will take advantage of the move. And if you even get a really aggressive down move, your long put will do better, and those short puts will not do will not do as well. So you're not going to make a massive amount of money if you get like a massive tanking. But if you're paying attention to the position, you will see that as the price is coming down towards the long put, that will kind of expand in value while those short puts decay in value. Or you could just do like a direct debit spread where you kind of buy the 30 and sell the 10, and then you have that 20-point spread. So then you're not delta neutral. You actually have a directional bet on your indexes. And then if you do get a strong move down, you'll make money on that trade. It wouldn't have cost you too much. So you can even buy a bit of time and then allow the markets to kind of play themselves out in the next couple of weeks or the next 2 months. But I think it would be, in my account, I would say I would be irresponsible with the VIX at 16, 17 to not buy some kind of protection with the aggressive kind of move we've had back up. Of course, a lot of underlines They're above their 50-day moving average. We had the the bread thrust that did all of this, and we've continued to see the squeezes, and we've popped up against these downward trend lines, and we've created lower, higher lows, and we're starting to. That's fine. That exists. The VIX is like 16 and a half. It doesn't cost a lot to get protection. So, um, you know, don't be a bathhouse dude without a wrapper. Figure yourself out. Get yourself organized. Do protection. I just think it doesn't it's it's not going to hurt. It might drag your account a little bit, but if you do get massive outperformance on all of your shares, having like a small hedge is not going to slaughter your results. I'm not sure if there's any if there are any stocks that you guys are like particularly interested in, or if you have any questions. I do want to respect your Sunday time since we are beyond the top of the hour. But yeah, just some follow-up. So we talked about VST. I told you guys it was that we were we were interested in the positioning of VST. And that has had a nice move. That is up $50. If you guys uh, listened on that call, let's see, where is CEG now? CEG as well. We did mention it when it was at the 190, and now it's up at the 284. We talked about TTWO. That has kind of popped up about $20, but now it's kind of grinding. But I'm okay with that. I don't mind the fact that TTWO is digesting here. That shows a lot of strength. If you look at the chart overall, it usually has kind of one pump up and then a longer consolidation. So that's done really well. We also talked about Ulta, and that also had a gap up and now is holding. It's had a really nice base. It's above all of its moving averages. It is now flipping the moving averages positive. So that is nice for institutions. But this 215 area was a significant consolidation area previously before this basing. So please be cautious. Is HIMS still a good entry point for a long-term play? We talked about HIMS the last couple of weeks, and we were buying when it was $32. Now it's at 64. Now, because it's already had price action up into the 72, it is possible for it to like get up there, but I would be really cautious here. What I would do if I didn't have any shares already of HIMS or any positions, any calendars or whatever, because we've had calendars on its roll up plus the shares, I would be selling puts. So I would like look back and be, so right now the 20 moving average is at the $47 point. I would expect that either HIMS is going to have to do a long digestion up here while it waits for the fundamentals to kind of catch up to it. HIMS has their forward PE is really high, but because of the fact that they can justify it with their future potential earnings, like actually their business model and like future cash holdings and revenues and all this kind of stuff, I don't think that it's going to fall apart. I don't think that HIMS is going to like come all the way back to the 28. So, but I don't think that I would just be like straight up buying shares here unless I really had in my mind, I'm going to keep them like for the next 10, 20 years. If I was trying to dollar cost average in, I would sell around that 45, just because that's right below that price gap. We could come back and test it. It is close to the 20 moving average. We did have we did have the little bit of consolidation there, but it is above an imbalance. The other thing is that we have now, like we're retesting that 65 area. If next week, because of the news from Moody's, we're already down at 61. So, it could be a double top. Now, equal highs like to run lows. I don't think that it runs lows like all the way to 28. I do think it could come back then and test something closer to the lower 50s, high 40s. So I wouldn't be buying shares here. I'd be selling puts so that I'm getting paid for waiting. And then if I get tapped in at that price, that's a decent price to kind of average into. Is coin still a good buy for this week? So we've been playing coin. Of course, they had a lot of great news. They're going into the S&P. So here's the thing. Being that coin is going to be moving into the S&P, it means that every time institutions buy shares of the S&P, Coinbase is going to benefit from that. That removes a lot of the volatility from the price action. Obviously, a lot of what was happening in Coinbase's price action had a direct relationship to Bitcoin, even though obviously that's not the only cryptocurrency you can trade on their platform, but there was a nice little correlation. Um, do I think that we just go from two, is this going to be like a sell the news? Um, I don't I don't think it's going to be like a massive drop down. I don't think that we will go all the way back and fill the gap um, to like 220. But I would be, so what we like to do would be either calendar spreads up into the squeeze. I do think that we can squeeze up to the 300 potentially. I wouldn't buy shares at 266. I would then be trying to figure out like a different scheme of trying to dollar cost average um, back a little bit lower. The nice thing about coin, unlike HIMS, is that their Friday candle closed above the Thursday and Wednesday candles. So we do not have equal highs on coin. We actually have a bullish engulfing candle that engulfs the previous couple days. So that is more positive for Coinbase. Um, but I would be cautious going in, like going up into that 300. So I wouldn't want to be doing just naked calls. I would be doing some other kind of structure. And the structure I would prefer would be a calendar spread. So I'd probably like to sell 2 weeks at the 300 and then buy like 4 weeks at the 300. So like for those first 2 weeks, while Coinbase is kind of maybe doing buy the rumor, sell the news digestion candles, and then like rolling up into that rounding top that we had previously, yeah, that's probably what I would do in order to like get paid if it does get up, but not by taking on a lot of extra risk. Great question. Any other stocks that you guys are most interested in? We did talk about Oracle last week. We thought it would make a little bit more of a pullback. So it kind of digested around the 148. We thought that it wouldn't digest, that it would kind of pull back to the 144 and then go up to the 168. It is now at 160, so we have made a significant move in our directionality towards our squeeze point. If you took that trade, good for you. CMG. Okay, I don't often trade CMG, so I will look at it, but I don't trade CMG too often. Um, okay, so let me actually see this. So we broke the downtrend. We are in, let me see, where's this zone? Okay, so here's the thing, right? Is that on the pullback, so CMG came down to the 47, popped up into that resistance around the 51, and then it dropped almost all the way back. A double bot, like it's not quite a double bottom because we didn't come all the way back to the 45. But the thing is that we got this gap up, we created an imbalance, and then we digested. I would have liked to, what I would have preferred to see in the price action is like some kind of rounding bottom and an imbalance that took us above the resistance. So I would have liked to see a really like aggressive candle that took us above the 53 and then that maybe we digested there, or then maybe we had a bit of a pullback into that imbalance before going to the next level. We kind of did it in an ugly way. We got a massive imbalance that didn't take us anywhere, and then we've digested and we still haven't gone anywhere. That's not like, that's not beautiful price action. That's price action that's telling you that buyers aren't convinced, but probably a lot of people who bought CMG at the 52 when it kind of came up and then rejected, that they're just still holding, hoping to make $2 or $3 on their shares. And if this thing gets back up to 55, I would not, I would not be, I would not be naked. I would not just have naked shares hanging around. I don't actually own Chipotle, and because after they did that, the aggressive split, they just killed their volatility, and I don't really like when stocks do that, when they do too aggressive stock splits. It becomes uninteresting to own. Um, okay, so we did talk about UNH earlier. Is UNH still a good buy? So we did, I mean, if you're buying shares, you know, you have to be ready to hold through the long run because it's going to have a lot of volatility just because of the conversation of potential fraud. But I mean, it is it is too substantial of a healthcare company in the United States for it not to move back up. I don't know that we can see it back at 600 anytime soon. So but could it clean up some of this price, you know, some of these price gaps, just to be able to get volatility back in balance? Yes, I definitely think that that's possible. So it's really a mean reversion trade more than anything else. So, okay, HIMS, we did just talk about HIMS, and the trade idea I had was to sell puts around, or what I would do if I didn't already own shares or wasn't already in a position, which I am already in positions, I would be selling puts at the 45 Lilly. So we are in positions on Lilly. Um, and essentially we like this rounding bottom and we're expecting some, you know, like we can get some positive activity back into the range, but it doesn't have gamma way like it doesn't have gamma super far away. So I'm not seeing any gamma like all the way up at the 1000, which I think was the target that a lot of people had for a long time. But could it move up back towards that, you know, clean up that fair value gap and then move into the imbalance? I think, you know, moving back up to the 80 is not unreasonable. Also, because on the like we have a longer, if you look at it with the 24-hour candles, you know, we had this more significant double bottom. And so I think that we don't necessarily have to go up and like go back up to the highs like around 920. But I do think with that kind of like double bottom position, we can get back near that 820 area. So that would be, you know, a reasonable target. Tesla. Tesla is just, I'm always wrong with Tesla. I won't lie. So I'm not, because I'm biased, because I just hate Elon Musk so much. Um, I can't lie. So I don't think you ever want to take my opinion on Tesla seriously when it comes to price action. I mean, the thing that we've been doing, and the big reason, the big part of it is that Tesla just has such a massive amount of volatility that you can sell puts like 100 points away and still take in almost like $300, $400 a week with one short put. But right now, when I'm looking at the positioning, so we were expecting that that Tesla would go up, but we thought that on the double bottom, it would actually try to sweep the lows of a double bottom. So we got the double bottom that we were looking for at that 220, but then we were expecting that off of the 280 area that we would then maybe try and sweep those lows and try and move a little bit deeper into like the 200 area before going up to the 345. Our short puts then never got tested because we never actually came back that low. Um, and but now around this 340 area, we're like right in a previous supply and demand zone. I'm looking at the weekly chart, so I should probably look. So we're digesting right at the 50% of that zone. As long if we don't like roll down below around the like 335, I think that then we can digest here for a bit. And robo-taxi, a lot of people are super into there's a lot of positive volatility on robo-taxi. I think people are like expecting that they'll come out with some positive news or positive updates about yeah about the self-driving and all that kind of stuff. So I think that that as long as we hold here, as long as we hold in this zone, we could squeeze up into the 400 into the robo-taxi event. That always creates positive volatility. Everybody's like, I'm always wrong about the about Tesla. Yeah. So we can all feel that. PLTR. So we have been just aggressively long PLTR. Yeah, I mean, it was just a company that made sense. I mean, they sell some of the best AI to do the best genocides. That's the only way to put it. Everybody wants what they're selling, because doing genocide well seems to be like the bringing sexy back. I don't know. So we've been consistently long PLTR. Do I think that they can continue to go up from here? I think that a lot of people are expecting they pull back to at least the 115. So I think that I think that at this point, PLTR is like one of the few companies that I mean, just the expansion of defense needs globally because of the fact that the US is like trying to pull away from NATO and NATO allies need to kind of step up. And Israel has proved that Palantir Technologies is the thing to have, right? So, I mean, like their capacity to make sure that they took out the most amount of life possible was only possible because of Palantir. So, I mean, like, no matter how much, like, I mean, the company just makes me want to vomit. The reality is that war companies prove themselves in war. And there's just no other way to kind of explain it. So it's like, Lockheed Martin or those defensive companies, like defense, not defensive sector, that in war times they demonstrate if they're actually worth their money. Now, if if the Chinese want to, genocide the Uyghurs, Palantir is their guy. So I don't know that Palantir can just drop from here on fundamentals because of the fact that I don't know who their competitors are anymore because they have proved that they are willing and able to do publicly to do what Microsoft and Facebook and Google, like they're scared to say how they're participating in these kinds of activities. Palantir doesn't care. Like Alex Karp is like super proud to be part of rise of weaponry. So, okay, so Derek is on here saying that Anduril will be better, will be bigger than Palantir. So I trust his opinion. He has never steered me wrong. So, yeah, that might be. What's their ticker symbol? I don't even know. I don't even think I'm spelling it right. Um, I'm gonna pull up their chart. So okay, so ACHR, that was a great, obviously again, it was a great play when it broke out of that downward trend line, and then it just squeezed super fast. Here's the thing, is that it is only a $13 stock. Um, it's, so it's not like it's going to break the bank if you start scaling into shares, even if you start scaling into shares at these levels. But again, if I was doing it, like if I was buying in my account, the first thing that I would be doing is I would just be constantly selling short puts because I would get paid. I could structure in along the move of the EMAs. But I mean, when you look back, any eventually it's going to come back to the moving averages, right? That's because that's how moving averages work. But the thing is that it could digest here and wait for the EMAs to move up to it. So I don't know that it has like a massive pullback, but it is overextended and it should have a bit of a cool off period. But does it only pull back to the $11 and then have the moving averages come up towards it? Or does it make it all the way down to the 950? I don't know that it comes all the way back to 950. Their earnings were really good. So I might be selling puts around the 10 and then like maybe slowly scaling into shares with the cash. Oh, okay. It's still private. So there you go. Um, yeah, actually, I didn't realize that he's black. I don't know how I just never even thought about it actually. That Alex Karp, the CEO of Palantir, I didn't realize that. Yeah, they just put it in the comments if anybody's listening later. Um, now there seems to be a is is he really or is he not? So I don't know. That is not a conversation that I can weigh in on. So. Um, All right. So again, this Friday we have retail sales. That's going to be probably the most like the bigger news for us. Obviously, we have retail sales, but I think the biggest conversation is going to be um, the ongoing conversation about tariffs. If we can get in any actual agreements, what actually happens with what actually happens with the 90-day reprieve, if that, if the 30% is it, or if that the conversations become tense again. It does seem like China just isn't the negotiation partnership between the US and China just is off because of the fact that in reality, China knows that the US is going to be coming up into a massive wall with the debt ceiling and with having to refinance all of these T-bills and all of the debt. So China knows that if they can wait out these, the 90 days and not give anything up to the United States, that they can probably then they have like they'll end up with a stronger position in the negotiations. unless the United States gets Russia or Saudi or something to put pressure on China. But the thing is that if Russia or Saudi are used in any of the negotiations with China, then the United States will definitely be again behind, on the back foot. Because whatever the negotiation agreements were with Saudi, in order to get them to kind of dump um, oil and gas onto the market in order to drop our inflation so quickly, there's something that they want from us. And if they're going to do this, what's the word that I'm looking for? If they're um, going to be investing, doing this like, massive investing in the United States of the $1 trillion over the next 5, 6 years, there has to be something in it for them. And what that in it for them is, what the commitments or promises are behind closed doors are still yet to be seen. But the U.S.'s situation with China, being that, I mean, with Russia, being that those negotiations seem to be going nowhere. And then now there seems to be some kind of unfriendly conversation between Israel and Saudi, and Israel and the United States are kind of seem off in their conversations. There are a lot of like moving pieces, and right now the fact that the United States decided to go to war with everyone at the same time on tariffs without having like anyone kind of behind closed doors on sides, means that he allowed a lot of other political partners to be able to kind of, you know, to pressure the United States more. Because the US can't be off sides with Saudi, China, Russia, and Japan, and all the other global actors. So there's a lot to be seen. There's a lot of uncertainty. Where this leads to is unknown. And the biggest thing is that everybody knows the US has this debt ceiling coming up. So they they know that every country right now in the world knows, if we can wait 2, 3 months um, to kind of then negotiate our tariff deal, they can wrap it up into what's happening with the debt ceiling and get away with probably a lot more than they would have if they tried to negotiate now. So I'll be surprised if we have any like major tariff news. The question will be what Trump says in order to keep the markets feeling good, in spite of the fact that, our bonds are being downgraded, our bond yields are up in the sky, US dollar is, dropping. But the markets are up 10%. And if this does happen to be a bear market rally, and equities start to contract again, people will not be feeling good. And Republicans will have to do something positive to build, you know, consumer confidence back up. What that looks like, I don't know. But Trump is great at tweeting. He is amazing at tweeting. He is the bigliest, best tweeter of truths. So, Xer of truths. I don't know what you call the X statements, truth statements. So, yeah. So he'll do something to make people feel good, even if it's just for a short moment. I don't think this debt concern is as big of a deal as these bonds are seeming. Um, I've seen this happen many times. It's noise. Every time it's historically been noise on the downgrades. Yeah. I mean, the fact that this is the third time we've kind of been here, done that, I don't think the downgrading is what's going to be problematic. I think it's all the other uncertainty that might use this as the kind of their like, instead of buy the rumor, sell the news, maybe they're going to sell this rumor and then buy it back up once things are a little bit more stable. When exactly is the debt ceiling situation reading its head? Is this a quarterly thing America has to announce to other countries? Well, I mean, rearing its head. So, I mean, this is it. They have, there's a specific date of which um, they have to negotiate a new budget. But what the date is, the debt ceiling deadline is, they said, okay, that doesn't make sense. Well, the last one was when is the one that's coming up? It'll be sometime in this summer, they'll have the budget deadlines. So right now, the budget deadlines are for the Treasury debt. So the statutory end is in November 2026, but before then, this summer, going into the summer months, there's some aspects of the budget that they need to, um, what's the word? They need to negotiate. So when is the exact date? Mid-July. It's always between mid-July and early October. So usually, though, they have something kind of agreed before they go into the summer recess. So they need to get this done before July so that they can go on recess. Yeah. Long as the dollar is a reserve, we're good. It's like buying bad credit, your credit down a few points. Yeah. I mean, the fact that they can print money gives them a lot of power in the conversation, but you don't want to be rolling out debt into like a seven. Because here's the thing. Right now, the Fed funds rate is around 5, or no, it's below 5 now. And if inflation expectations are for 7, that would mean that the Fed funds rate actually has to come up again to meet those inflation numbers. And that would put the bond yield above. The bond yields always have to be above well, they don't always have to be, but that's the only way that you're incentivized to buy bonds, is that the return on the bonds is more than the return or more than the loss on inflation, and it is a safer competition to equities. Yeah. So right now, the 10-year, because it was running up, yeah, is at 4.5. And so there was a bit of a downturn there, like on the China news, it came down to almost 4. But hey, when Biden was still president, we came from 4.7 all the way down to 3.6. And we're up at 4.4, which is a 25% increase. So, yeah. All right, friends. So hopefully next Sunday we will have better updates or clearer updates on what's happening with bonds, what's happening with China, what's happening with negotiations. Maybe we'll even find out exactly what the U.S. committed in their relationship with Saudi and the OPEC countries over the last weekend, besides just the schmoozing and buying lots of chips and the AI revolution. But something I will say is that the positive energy that was coming off all of those mega cap companies, I mean, it does demonstrate that no matter what happens with like directly the US economy, globally what's happening with AI productivity is still very attractive. And that is very attractive in spite of what is happening with like US bonds. So the fact that you have companies that are, or countries that are, putting massive investments behind some of these top AI companies, it should incentivize you to, to zoom out, still position yourself well, but not to lose confidence in where these companies are eventually going. And I think the number one area is semiconductors. They've had a really, really beautiful run here. They've done really well. For those that have been taking those plays, congratulations to you. I mean, just AVGO is looking like phenomenal. Our members have made so much money on SOXL, NVIDIA. We didn't play AMD. I know that that's Dre and Zay. They're totally into AMD. I I'm always like, oh, I never feel like I can. I never have enough conviction in a play to be able to get anything that I think is going to make money. But of course, now it's had a really, really nice run. So congratulations to those who did catch that bottom. I will say this much, XLP is a great time to buy. It's ready to run. Also agree with the AI thesis. I'm buying by the boatload. Um, Also data centers, yes. So Okta, Oklo, all of those, new, like anything relating to data centers, those have done really well. Congratulations to our members who have been taking those plays and continue to participate in those stocks. Um, now Derek is coming around to AMD. So congratulations to Zay and Dre who put those out to their communities and their members, I'm sure, made money trading them. But I think that we have, yeah, I know it's everybody's Sunday, it's a family day, and I know a lot of people are having graduation. So I really want to thank you guys for being on with us, and we will see you again next Sunday. And I hope you take some of these trades and make some money and come back and tell us how they did. Tell us, and then come back with all your questions. We love having the back and forth dialogue. All right. Thanks for joining, friends, and we will see you next week. Have a great Sunday and a great trading week. Bye for now.